Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, June 20th, 2025. Ron Quaranta here with my co-hosts David Brill and Josh Klayman. Happy Friday, friends. The longest day of the year. It is the summer equinox. I'm probably screwing that up. So we're truly in summer at the end of today. Before we begin, our usual disclaimers, everyone, please keep in mind that nothing discussed is any sort of advice. Certainly not anything I'm going to say. David, Josh, certainly what we're talking about really doesn't represent the opinions of our individual firms and really our own personal opinions. Thank you, everyone, for joining us on LinkedIn, Live, on X, on YouTube. David, Josh, with disclaimers out of the way, it's been another busy week. We missed last week. Schedules wouldn't let us get together, but it's good to see you both. David, let's start. What's going on with prices?
Well, we have this conflict that's going on in the Middle East, which I don't want to minimize by any stretch because it's a very serious thing that's going on there. But I think people are just waiting and seeing right now. As you know, when there's these geopolitical events, usually people are running away from risk assets. But fortunately, Bitcoin has held pretty steady through this so far. And I think that's a really positive sign. All coins have sold off some, but I think there's some other reasons why they have sold off, and we can talk about those a little later. But I would say status quo in the last couple of weeks is not a bad thing at all.
And what about guys? What about the Circle IPO? With status quo.
We were just talking about that in the virtual green room without sharing details, Josh. But what do you do about an IPO that's gone up 600+% since the day it launched?
Yeah,
and can that hold?
I mean, look. First of all, congrats to Circle. They've been super patient. They were considering the SPAC route. They didn't end up doing that. They've gone through a lot of regulatory hurdles. So, congrats to them. I will say, I wonder if it was priced properly that it's gone up so fast. But otherwise, it's a good valuation, problem for them to have, so to speak. But good for them, and it looks like there's real demand for stable coins and for the USDC. So, like I said, good for them.
But David, to that point, and Josh, it's a really important part of this week's conversation. What happens when everyone starts getting on the stablecoin bandwagon, goes IPO? We can't possibly expect the next IPO to go up 600% in 3 weeks, can we?
Well, look, I think that there's a real demand for crypto-related companies right now. And so I don't know if 600%, but look, Kraken's the next to go to market. I mean, a lot of it really depends on the valuation, because if you value the IPO, I don't want to say properly, if you value the IPO consistent with what the valuation of the company, the target valuation is, then it should go up, but it shouldn't be going up multiples. So what I would say is that I think there'll be a lot of demand for these crypto IPOs as we go to market, but I don't know if we'll see the multiples, as ideally they'll be priced better and more effectively.
David, what do you think is the reason the investment bank syndicating firms mispriced and misunderstood demand so badly?
Well, look, the Genius Act, was approved or was about to be approved almost simultaneously with the launch. Yeah. Now, I would have liked to have thought that since it had progressed so well, that that would have been taken into consideration. It's really hard to say, Ron. I don't want to second guess folks who do syndication for a living. Mm-hmm. But there definitely was a significant delta, and I would expect in future IPOs that will be addressed so that you don't see that kind of delta.
Yeah, Josh, you must have been happy with the Klayman family office getting your allocation.
Well, anyway, I will say, I am curious, guys, from your perspective about. Remember when we were seeing the bids, like the proposed bids for Circle beforehand, from an M&A perspective of, I think, like $5 billion?
Yeah.
Like, how does that stack up now to the current valuation? Like, I don't even know what the current valuation is. I will say I didn't check, but I just wonder, like, how when we think of what those numbers were, that I think, was it Coinbase and Ripple that were proposing something like in excess of 5 billion for acquisition targets?
Yeah, I'm trying to look up the valuation now, and it is certainly more than $5 billion.
Yeah, I mean, look, it makes sense that Circle made a good choice by not accepting either of those bids. It's not clear what the bids got up to because they were private bids, but clearly it seems like it was worthwhile to go and finish the process.
Yeah.
The one thing I'll say too, Josh, is a lot of times when a company files for an S1 to go public, there are potential bidders that come out who are interested in the company, and it sort of allows that process to take place. But I feel like Circle spent so much time and effort in many, many years. I think that maybe they just felt that having a public ticker and going the full route was what they wanted to do, and it's worked out for them. Were you able to find a market cap?
I can't find the market cap because, of course, we're live and my computer is no longer working properly. So, Josh, we'll have to come back to it. But I mean, David, it does make me think there's a bit of serendipity to all of this as well. You mentioned Stable Act. I mean, they timed this to perfection, right? There were really smart people who might have taken the $5 billion bid. So you got to give them credit for holding out for a bigger wager.
Yeah. Look, I mean,
By the way, I don't know if this.
you can have confidence.
Greg Murphy.
Go ahead.
Ed, I'm sorry, David. Greg Murphy coming with the win, 57.5 billion. Greg, thanks, buddy.
No, it's funny. Greg and I must have been on the same wavelength because I had been searching and not looking at the screen, and I was just about to say that. Sorry, dude. I didn't mean to interrupt you with what you were saying.
Wow. I mean, 57.5 billion. That's significant.
David, it looks like you're having internet problems, which surprises me. You're at the condo at Billionaires Row. So we should just move on from the topic. Yeah, but I mean, Josh, to that point, all joking aside, you get a lot of clients that come to you. What do you think the landscape is, or how are those clients responding to the news of a Circle IPO like that? Are all of your clients saying, Josh, I got to go IPO?
I wouldn't say all of them are, but certainly, I mean, I think there's an incredible excitement, not just that they did the IPO, because remember earlier this year, there were points at which people were saying, oh, people are backing off of the IPO market, right? This one's being delayed, that one's being delayed. And I think people, at that point, at least, just a couple of months ago, really, were not expecting certain IPOs to go forward, let alone to have such a massive result. And so I think that, along with the price of Bitcoin, which while volatile as ever, is certainly far above where it has been in past years, right? And reaching new highs frequently, as well as momentum in Congress. I think this is making everyone super excited. And I think, this isn't the only kind of going public event that we've seen. Certainly we saw folks like Galaxy do it a different way. And they already were listed in Canada. But yeah, I just think this is opening people's eyes to, I guess equity is hot again.
Yeah. Emma Channing, thanks for joining. Not getting bought by Ripple for cents. Absolutely correct. Josh, David, you opened the Pandora's box of talking about DC and legislation, Josh. You might as well go down that road. Genius Act gets passed. Genius Act clears the Senate. It's onto the House. We had a long conversation, David, yesterday at our crypto asset working group where we had a couple of policy experts and Adam Goldberg. Shout out to Adam, who's watching, I think, talk about the political dynamics of moving this stuff forward. Now it goes to the House, and the House is kind of a messy place to get legislation passed. David, let's talk a little bit about the tone and tempo of DC. Josh, David, the three of us have been to DC, met with colleagues, we've met with regulators, we've met with Congressman Style and others. What's the likelihood, David, of some of this stuff getting passed? There's more than just Genius Act out there, and there's a lot of horse trading that needs to happen.
Yeah, I had several calls with folks from DC this week, and I think that there's the ambition to both get a stablecoin and market structure bill done, But I think, I think about conversations I've had with people on the Hill over the years. And one of the things they always said is if there's a piece of legislation that you can get done, you should get it done. And, things can change, the winds can change. So my view is that, either the stablecoin bill in the Genius Act form, or taking maybe some small piece of the House bill that isn't in the Genius Act. But this is what should be voted on and moved forward. And I know the president had said that recently, that would be his hope. And so I think for the industry, it would be best just to, get this bill in this form or with some slight additions, move forward and voted on and, put into law.
And David, that speaks to what we've often said, which is, those in the industry reach out to representatives because this is still part of that education curve. Josh, you talk to folks in DC on behalf of clients regularly. No, I don't think the three of us are lobbyists. I'm certainly not. But Josh, what's your perspective on how some of this stuff moves forward before the August recess for Congress?
Well, I think, that is a pressure point, right? President Trump has set an August deadline to get this kind of legislation passed. And we saw him go online and say, hey, we're encouraging you, House, to pass the Genius Act in its current form. Of course, the House, as David noted, and you noted, is faced with questions because it has its own Stable Act, right? It also could propose changes to the Genius Act or adopt pieces, as David had noted. But maybe they'll ride the momentum. So I think it's a really exciting time. Now, we have to remember, though, that there are folks, and first let me applaud Senator Lummis, Chris Land, all of the others who've been involved in the act, the Genius Act. And I think getting it passed is hugely important. But we have to remember, right, there are people with different views, and some in the market as well as in Congress may be more in favor of things that are under the Stable Act. So I think there's an element of, what is good for me personally as an entity, as a team, as a project, as a person, versus do we look at that, or do we look broadly and say, look, we want the US to be a home for crypto, a clear, welcoming home. And do we do this for the industry and find a way to push and get it through? I think that's a big thing. Also, we have to remember the Genius Act is hitting the House at the same time that we've got the Clarity Act, right, coming to the floor. I think some people, at least from what I've heard, are trying to get these things passed, kind of as a together thing. But they're similarly with the Clarity Act. And again, applause to the laboring oars of drafters, including many. I won't name them all here, but to get things out, there are those who are saying, hey, we should be taking a closer look at things. In fact, there's a great article that Rob Schwartz posted yesterday. It's called "The Clarity Act: Securities, Commodities, Digital Commodities, and Other Things." And as you guys, I know you know, but for the audience at home, Rob is a partner at, I believe, Morgan Lewis now, but he was the general counsel of the CFTC until very recently. So he has a lot of views about this. But what really struck me about this article, and I think it will resonate with people just in general, is he has a line, where it's talking about, the line between commodities and securities and all these sorts of things. And he says, but sometimes a thing is just a thing. And I think this is an important thing, I think, for us to bear in mind as we, now granted, yes, we want to get legislation passed and reach the destination that we've all been trying to get to for so long. I think that is a powerful thing to remember, though, that sometimes a thing is just a thing.
David, did you catch that poetic language? The laboring oar rowers of drafting. Shout out to the staffers, but Josh, well said. David, to that point, though, when we talk about this, I want to throw something out there for us, and the three of us talk about this regularly, the kind of hyperbole we see in the news. And this is not about anything like, politics or what side of the political spectrum, but there was pretty overwhelming bipartisan support for Genius Act. But David, Josh, what about the concerns you see publicized, which is this does not have enough in the way of consumer protections. This could be systemically damaging to the financial system. David, I know where you and I and Josh generally sit on this, but what's the answer to that?
The answer to that mostly is that they should read the bill. I mean, candidly, look, I mean, these stable coins will be backed by U.S. Treasuries. So if you have a concern about the U.S. Treasuries, well, then you have a concern about the backing for our markets in general. And then there are, I think there are, a number of, provisions in there for consumer protection. And look, the more clarity we have, the less ability for third parties to act in a sort of gray zone. And so I think some of the arguments that have been made really go counter to the fact that when you have legislation that's passed, and you have a bill and you have the regulations in that bill, it sort of takes away the gray area. Yep. And the last thing I would mention is, and Adam Goldberg, mentioned this in our talk yesterday, is that, if an entity develops a stable coin and it reaches above a $10 billion threshold, then they have to be registered with the OCC and become like, a bank-related entity. So I think people are going to be very thoughtful about what they do in this space, but I do think that we'll see, a number of stable coins come to market. And, just generally, I push back against that notion that there's enough consumer pro in there.
Yeah, and I agree. I think another, like, when I think about some of the points that I hear people talking a lot about from time to time, including whether there should be a state path or whether the state path should be on parity with the federal path. I mean, I would just say, well, there's a lot of things I would say, but in general, that and things like the Genius Act does not, for example, permit yield-bearing stable coins to be counted as permitted payment stable coins, things like that. But my general view is, what is it saying? Like, don't let the perfect be the enemy of the good.
Yeah.
Right. And there's so much good in this, to at least in my view. I mean, there are actual amendments to the CEA and to the various securities law statutes in the U.S. at a federal level to say these things are not securities or commodities.
Right.
How great would that be to have that actually as a change in law by Congress, as opposed to having to rely on a staff statement by the SEC or something like that. So I think there are a lot of good points. As David said, I think read the bill.
And in the conversations we have at WSBA and with colleagues, Josh, to that point, my comment and feedback is always, it's better than the nothing we had previously. And if you've got specific things that are concerning, put that forward. Full disclosure for everyone watching, and thank you for joining us. Josh, David, we've all at the WSBA, we've submitted commentary on Stable Act, for example. We're in the midst of providing feedback on Clarity. David, Josh, I'm going to throw out, this is not a prediction before anyone tries to pin me down with a wager on this, but I would argue that we've got a better chance of stablecoin legislation clearing and being signed into law before the August recess than the market structure bill. But David, tell me I'm wrong. I actually think the Clarity Act market structure bill is more important. Tell me where I'm wrong.
Well, look, I don't think you're wrong. I do think we'll get a stablecoin bill prior to August. And look, personally, I'm in favor of yield-bearing stablecoins. But again, we have to sort of look at the bigger picture. And this bill in this form can be passed by Congress, and it's something we need. Look, market clarity is a bigger issue, and to me, a more important issue, because it really reflects how our ecosystem can be, work in a way that can be consistently, applied in the U.S. and that regulated institutions can work with these tokens. Without that, I think regulated institutions still can't work with a number of these tokens. So I think if you look at it on a broad ecosystem viewpoint, stable coins are one slice of that. Yeah. But the market structure ultimately is the most important piece of the pie.
And Josh, weigh in here, because when we talk about Clarity Act and market structure, it answers a long-standing question that the three of us have been talking about since 2015, which is it SEC or is it CFTC? To me, that is markedly different than the conversations we were having a year or two ago.
I agree 100%. I mean, I think this is where we're trying to get. What I do think though, and I'm trying to pull up this article now because again, I really like this. Sometimes a thing is just a thing.
If it's a duck.
Yeah, like I do think allowing for space to understand that there may be things that are neither commodities nor securities is an important thing to think of. I just don't know that what do we do about it right now? Now, interestingly, I will say this article that I was referencing, it also mentions that the digital commodity definition carves out what is described as one of the most promising digital asset classes, which is tokenized real world assets, and leaves them sort of straddling the lines. But I do think, again, I encourage people to read the article. I think these are important things to think about. I also do think, if the choice is between adopting something that we have or waiting until the next Congress, and is that what we want? I don't think that's what we want.
David, Josh, one of the things I think about when we talk about this, a thing is a thing. David, it makes me wonder, have we finally put to rest the conversation that happened for a long, long time, which is essentially crypto is not a new thing. It's, and with respect to, former Chair Gensler, they're all equities. I think there's no new thing. Can we finally say crypto, digital assets, David, are a new thing?
Well, I think we all have thought that they're a new thing for a long time, and I think that they're just a few outliers, and I think it turns out that Chair Gensler's view about it was the outlier view. So that's the way I like to think about it. And look, I do agree with President Trump. We want to be the home of innovation, and we don't want to be left behind. And we need regulation to help us get to that next level for our institutions to be involved. And so, like Josh said, perfect is the enemy of the good, but we do need to move forward, and now is the time to move forward.
Yeah, David, Josh, thanks so much. Emma Channing, the RWA expert, waves paw. Yes, that's exactly why it is a drama for her. It's a drama for so many of us. Emma, thank you so much for joining. David, Josh, in the background of all of the stuff that's happening in DC and the crazy IPOs that are happening, I'm going to do it, Josh. I'm sorry. I'm going macroeconomic. There's so much data that's out there. And if we could just start that conversation, David, I think it's important. You and I chatted about it earlier today. We got some economic data, right? Jobless claims came in a little bit lower. So, the jobs are not bottoming out. Fed had a meeting yesterday. There's not an interest rate cut. I'm not waging on how many, but David, I would argue there's going to be an interest rate cut. When we look at that macroeconomic data, is this setting up kind of a launch pad for a broader crypto rise in markets?
I think so, Ron. But I think the economy is actually doing better than mainstream media is sort of reporting. I really think they're sort of downplaying how well the economy is doing. And, it's unfortunate. I mean, if you look at things, areas where we're losing jobs, we're losing government jobs. And that's not a surprise with what's, the government's policy, what, President Trump's policy has been. But also inflation has stayed pretty low. Unemployment hasn't risen too much. Yep. And, and this is also keeping in mind that the massive amount of revisions that have been done, during the last year of the Biden administration. I mean, we have the receipts on this podcast about saying that we thought the unemployment numbers were not correct. And we were certainly held true to that. So I really think the economy is in a better shape than is being reported. I think there is some cloud with tariffs and how it's actually going to affect, inflation. And are people buying less? Are people flying less? I think there is some of that we need to find out. Yep. But on a day-to-day basis, I don't feel that we hear a lot of inflation shocks. And I think costs have, I don't want to say moderated, but I think they're much more consistent now and they're not upward moving.
For everyone in the audience, just so you're aware, the thing that David and I and Josh text about more frequently than crypto price moves is revisions to economic data, which is the nerdiest thing I've said in a long time. David, I agree with you. I want to throw out one thing there as well, and Josh would love you to chime in, aside from the fact that I'm absolutely sick and tired of hearing the word tariffs every single day of my life. I'm going to say something that's going to be more controversial than I mean it to be. A lot of the market is saying, well, we need to see the effect of tariffs, and I want to avoid the politics of it. I think the economy, David, has mitigated it as much as it can, and that we're beginning to see the impact, and it's not as bad as people think. Josh, David, like in the day-to-day, we're seeing that. Would you agree?
Look, I agree. Going back and forth from New York and Florida, I certainly, have two different data points to work from. But no, and frankly, I think if we had rate cuts, we'd probably see a drop in housing costs because there's this whole stock of housing that's not moving because some, sellers want a certain price and buyers aren't going to pay that price at this current interest rate level for their mortgages.
David,
So,
the data point for you is what? The price of the fuel for the Gulf Stream? What's the other data point? I had to do it, Josh.
all my Uber Eats bills seem to be consistent the last couple of months, so I think that's a good sign. No, I'll leave the Gulf Stream to Josh and Teterboro. So
Yeah, I agree. Like I haven't, but then again, I haven't really bought any big ticket items recently to know what kind of an effect that might have. But I agree. I haven't in my day to day noticed a huge difference.
Yeah.
And I think that's what you're saying, Ron, is kind of consistent with what we're seeing in the news even today.
Yeah.
Right. I think the Fed was saying it's still too early to assess the effects of tariffs and other. I think there was also a report that I saw, not a report, but like an article asking like have prices really increased?
Yeah.
Kind of what you're saying. So yeah, I mean, I don't know.
But I think I'm saying something slightly different. I'm with you, but my argument is that we keep hearing in business news, particularly, well, the data hasn't hit, the tariff data hasn't hit. My argument is that business planning is about forward expectations. I think some of the impact has hit, and it's just not as wildly terrible as some people in the marketplace have said. And again, politics aside, I just think people planned, and I think people have been planning since January about some of this stuff. So it will be interesting to see where it goes. Go ahead, Josh. Sorry.
Yeah, no, I mean that makes sense to me, Ron, and I thank you for clarifying. Yeah, like the idea of something being priced in already.
Yeah.
David, Josh, I mean, beyond the politics of the U.S., and we all have colleagues in Canada, shout out to Greg, and we have colleagues in Europe and Asia as well. The three of us know crypto markets are a global market. David, I'm going to go uber wonky on you, and we're going to love it. I've been tracking the DXY for the past 2 or 3 weeks. DXY trending down, and I've been really spending a lot of time analyzing the inverse correlation between DXY and particularly Bitcoin. With DXY moving down. Yes, sorry, Josh, go ahead.
I need to break in here with my lack of knowledge. Would you please explain what DXY is, both for me and for those listening at home?
Yes, I'm sorry, Josh, and I should have texted this earlier today. DXY is the dollar index, which represents the value of the US dollar against a basket of currencies around the world. Essentially, when the DXY falls, the dollar's worth less relative to those other currencies. But what that also means is that's a forward look at lower interest rates, right? The dollar will yield less in the future. So in my mind, David, Josh, that's a bit of a predictor. Like in the future, we're looking at probably lower interest rates. And David, you and I talk about this all the time. Lower interest rates is Josh's favorite phrase, risk on. Is that as powerful a correlation, David, as I think it is?
I think that and money supply, the increase of money supply in the economy, I think those two are very bullish. I mean, I really think there's a lot of bullish indicators right now for crypto and for Bitcoin. Between, like you said, weaker dollar, money supply, I think the geopolitical issues right now just need to sort of resolve. Does everybody get comfortable that this becomes regionalized and it doesn't become a broader conflict? And I think that might be the one thing that's holding people back from allocating new money to risk assets. And one other thing I want to mention, and I heard somebody say this, and this isn't my original thought, but somebody was saying that, the equities market and like looking at Circle and maybe some of the other IPOs may be sort of taking, juice from the altcoin market. And maybe people are selling some of their altcoins and buying the Circle IPO and maybe some of the other IPOs coming. So that's kind of an interesting thing to see. Are we going to see more liquidity in the markets altogether, or are we going to see, altcoin, volume move into equities?
Yeah, David, Josh, thanks so much. Shout out to Emma. By the way, Emma just made my week. Anytime Emma 100% agrees with me, that's a good week. So Emma, thanks. And risk on 29 minutes in. So it is a good point. Emma, we'll try to do that earlier. Josh, sorry about the DXY thing. I should have let you.
No.
Warned you in advance.
I love when you do that, because this is how we learn.
Oh.
But this is how I learn. Let me not. You guys know. This is how I learn.
No, David, Josh, I appreciate it. There's still more to cover. David, you raised something interesting as well. Not a macro conversation, but certainly a financial markets indication argument, which is the options market. And for everyone in the audience, David knows far more about the options market in this space than most people I know. But the $4 billion in expirations happening? Is it today, David? Like, what does that mean from the perspective of shorts, for example?
Well, there's a lot of volatility, and basically what it means is that at certain strike prices, the majority of the money is at a certain strike price. So if certain people own these options and it goes above or below that strike price, they'll be either in the green or in the red. So it looks like that, and I don't know for sure, but it looks like the majority of the options were around the 104,000 level, as we've kind of gravitated to that this morning. But, I think we could find the specific data later, but that's what it is. So basically the market makers and the folks who own a lot of these positions, really it's in their interest for the price to move to that strike price so that they're not either in the money or out of the money and having to pay extra for those options that they own.
And David, we're holding at 104 pretty tightly. It looks like there's good volume there, but I read a technical analysis and I'm trying to understand the gap, but their argument is that below 104 we leg down to 81, which really feels like a big gap down. I don't buy it at that price and volume.
I don't buy it either, and frankly I think if we were to get a little bit below 100, I think there would be a lot of interest in buying Bitcoin a little bit below 100. So no, I don't really see it. I mean, look, we don't know what's going to happen in the Middle East. Like, my personal view is that I think there's one outcome that I see happening without it becoming a larger geopolitical matter. But, it could go in another direction. And if it were to go in like a very broad direction, then we could see a sell-off. But I don't really see 85. Yeah. I could see more like 95, 96, not 85. 85 might be wishful thinking for people who bought later. Who didn't buy in and now see it, 20% higher and want to buy in.
At 85, now. Josh unleashes her private family office to just go out and get BTC. They are cut loose. Emma, thanks for dropping a note. How about something that's a commodity and a future at the same time? Josh, I'm just giving that to you because I feel like there's a morph word in there as well. But, it's a really interesting point. Can something be two things at once from a regulatory perspective?
I mean, I would say, and I don't have like an answer to the thought-provoking concept that Emma put out there. But what I would say is, if you think about our existing laws, right? The CFTC, if we go back an era, right? They were generally speaking saying that nearly every digital asset is a commodity, right? And then sometimes those also may be securities under the securities law. So I do think this concept that something may be both, it does exist. Yeah. I think the question is, if it seems like if it's both, then unless there's a different authority of the CFTC, right? Like if the CFTC doesn't have authority over the spot market for regulating it, as opposed to just like, market integrity, like fraud, anti-fraud, market manipulation, right? Then it would seem that the security aspect of it would dominate, right? That's what I would think about the public and private chains. I think that's an interesting question too. Like right now, there's some ambiguity, for example, under the Genius Act, whether whether private permissioned chains, if stable coins are on private permission chains, are those payment stable coins? So I think these are all interesting questions that I don't have an answer to.
And for everyone in the audience, well said, Josh. For everyone in the audience, in the United States, something can be many things at once. Ask the IRS, which calls it all property.
Yeah.
David, Josh, really important points. Thank you so much. Last macro thing I do want to bring up, David and Josh. It's not really macro. It's more about markets focused. I keep seeing a lot of news, David, about perpetual futures. You and I, with as much humility as we can muster, get the markets, all three of us do. I think perpetual futures is a little bit risky for the day-to-day. But again, someone out there tell me I'm incorrect.
Look, you know how my view is that I think people should have, this full suite of products available to them, and that we shouldn't be preventing people from, trading different products. But perpetual swaps are definitely one area that I think do need some more sort of limitations and controls around, because the ability to lose money very quickly on them if you're not sure what you're doing. I do think there need to be stricter controls about that and leverage limits on that. Maybe not for institutions, maybe for individuals. And me, I'm not very paternalistic in looking at these things, but I think that is one area. Not at all, but that is one area where I think people have to tread lightly. And I think people get caught up with, tweets about people making 3-digit, amounts using perpetual swaps, like you said to me in the green room, Ron. And so I think people think, oh, well, if this person can do it, well, I can get that return too. And, it's like the one person who does it and the 99.
Yeah, look, David, you and I have talked about this a lot. Please, for anyone listening, public service announcement, do not get investment advice about anything from social media at all. And I may disagree with Warren Buffett on a lot, David, but if you don't understand it, you shouldn't buy it. That's all I've got to say. Yeah. Josh, agreed?
Agreed. And I would just say from a client perspective, there is a big uptick in this, as well as, for example, the kinds of platforms that these might trade on, and what potential DCM applications and things like that to the CFTC, which actually, if you look over the past 10 years, there actually haven't been that many DCM applications in general. So.
Yeah. Josh, next on Monday, we have a legal working group meeting where we're going to be talking about a lot of this stuff. I wanted to get your thoughts on something that we really don't get enough time to speak about. And we're going to be doing a deep dive on Monday, Josh, on some of the European stuff that's happening. We have shout out to our friends at Cahill. Jonathan Galea will be joining us to talk about something that's happening in Europe. Josh, you have clients around the world, and I'm kind of curious about your perspective and the conversations, to the extent you can discuss them, and certainly not naming firms. What's their perspective on what's happening in the United States? And do they see it as opportunity, or are we still so far behind that they're planning to not really move forward in the United States?
So with the caveat at first that, of course, I have a lot of colleagues in the UK and Europe who are focused on those types of issues. For just holding aside for a moment, so I won't speak about the European, like about MiCA or anything like that. But I would say that for clients outside of the U.S., in general, the more clear our rules can be, the more attractive, because the uncertainty, while some might like the uncertainty to be able to play in the gray, generally speaking, those are not my clients, right? So I think to the extent that we have clear rules, I think people are looking for that. And I think, at least this is my personal view, just based on conversations with people from around the world during some of my travels. Some people are saying, oh, wait, is Europe going to fall behind the US once we have a, clear legislation, right? Is it something where we're going to be, unleashing, in grand scale? So yeah, I think there's obviously a lot going on in other parts of the world, but I think the more clear we can make our rules, the better.
Yeah. Josh, I'll add one thing to that. Had the opportunity to meet with some overseas colleagues last week, and the answer that they gave me, or the conversation point, was it's about damn time. So it is interesting to see how some of them are perceiving that. David, again, you've got international clients as well. Without getting into the specifics, I'd love to hear their perspectives on some of it. I'm sure, I've got to imagine it aligns with what Josh is mentioning.
Yeah, look, a lot of our clients are interested in onshoring. The question is really, it becomes a tax question, because in certain jurisdictions, we've seen a lot of token offerings done, with a Klayman entity and a BVI sub. And if you want to do those token offerings in the US, you're going to have to pay US taxes. And so there's a big delta in those taxes, and that's what some of the projects are deciding on how they want to approach them.
Yeah, Josh, David just queued up the easiest softball for me. As Josh, you probably are aware, the following legal working group meeting on July 7th, I think right after the Independence Day holiday here, we are deep diving on how do you onshore and the challenges, David, of tax and structure and all of that good stuff. Josh, I think I cut you off, please.
Oh no, I was just going to say, to that point about onshoring and or reshoring, whatever it may be, right? I think one of the reasons that this legislation at the federal level is so important is not just for the federal, it's also for understanding the state landscape. And of course, states, as a result of what's going on, are having continued conversations, across different types of regulators at the state level. And I think there's a question of how much federal preemption there may be over certain state activities, and that has different views arising from people, to say the least. Nevertheless, I think if you're a company outside of the US looking to try and do business in the US or set up shop in the US, it's not just a matter of are you going to the US? It's sort of where are you going in the US?
Right.
And so understanding whether, for example, certain state paths forward will have parity essentially with a federal path, right? Like whether it's a state chartered bank, right? A special purpose depository institution or something like that, right? Versus, or trust company, versus an OCC charter path for various things. I think understanding whether those things are going to be treated similarly for a variety of reasons is hugely important to folks looking to move to the US. Because if you say I want to set up shop in this particular jurisdiction, what does that mean? What can you do as a result?
Yeah, Josh, to that point, I know there are different opinions within the WSBA and within the industry about federal preemption. I do want to do a really quick shout out. Michelle Gitlitz, Renato Mariotti, Joe Sicolo, David Pope, all members of the WSBA representing and are deep experts on some of the state stuff. Josh, we're probably overdue for a session with them. We should probably pull some of them into this, but that'd probably be a 2-hour broadcast. We're coming up at time, David, Josh. It's been a busy week again. David, I'm going to ask the question, and I'm probably going to get yelled at by you separately, but I think there are too many Bitcoin treasury companies, and now it's bleeding over into things like Solana. Why are there so many Bitcoin treasuries, and how is that a sustainable model?
Boy, sure, you picked the topic right at the end of our look, I think that there's an appetite for a few Bitcoin treasury companies. I think people saw the returns that Strategy is has gotten, and want to replicate that and want to use the equity shell, we'll call it, or framework, and raise money to buy Bitcoin or buy Solana. So I think there's some interest in that. But I think that, once you get to 3, 5 of those, it becomes too much. And also you have to be careful about how they're raising the money and, how expensive that money is and how careful they are on when they buy. So it's not just a no-brainer that you raise money at any cost and buy Bitcoin and then, YOLO for it. Like there really needs to be a process. There's some interest in it because there's still some wirehouses aren't allowing companies to buy the Bitcoin ETFs, and some, so some people want to buy these equities But I think there are going to be funds that come along, whether it be ETFs or otherwise, and that might be the better vehicle for it. But look, I think a mix of both are fine, but I think the more proliferation you see, the more it becomes a little bit of a bubble.
But David, yeah, agreed. Part of the reason I bring this up is I'm starting to see analysis in pretty reputable publications. I'm thinking Fortune, for example. I forgot which author, and their argument was be very careful about the valuations, because the truth of the matter is some of these treasury companies are way overvalued relative to the holdings that they have. I mean, strategy might be different, at least from the perspective of sheer mass of BTC that they hold. And David, they do some pretty complicated issuances. It's not just straight, issue more common stock. It's really interesting preferred equities. It's really interesting debt structures. But are you worried about this kind of fear of missing out at a treasury level? And we're seeing weird pivots again. Like we brought up the Long Island Iced Tea Company, Josh. I think a couple of sessions ago. That's not slowing down, and I'm concerned about valuations and people not paying attention to that.
Yeah, look, I think if you're buying something that's worth more than the intrinsic value of the Bitcoin, if you're buying that kind of entity, that's can be problematic, and it's something you need to really think about. Why are you doing this? Are you just trying to turn a quick profit, or do you think this company is going to be able to do it better? So yes, in the longer term, I think it's problematic. Look, the market also has to sort of work itself out, and there are winners and losers. But I think right now, if you want just one single crypto, I think there may be more efficient ways to get it.
Yeah.
The entities I think will be more interesting will be funds that have, like, whether there's a staking fund or a top 20 fund. I think funds that are diversified and give you exposure to a variety of tokens, whether it be, I'm a big fan of certain segments of our market. So if there was a crypto segment fund, whatever that segment might be, I think that could be really interesting to people. I just think just replicating the Bitcoin treasury model does, seem risky.
Josh, do you agree?
I mean, I do agree. I have to say, like, if the strategy is buy and hold, then how many buy and holds can you have? Now, if the strategy is like, okay, we're going to be buying and selling, and then maybe your faith in the particular person, right, or group of people in charge of that, maybe you think they have a better strategy or a better crystal ball. David Brill, I'm waiting for your offering to come out.
Just the cult of Sailor, I think, is sort of what you're alluding to. And I want to throw out one thing, Josh. I don't know if anyone knows that David threw out I think it was book value, David, hearkening back to his equities days.
Yeah.
Raymond Dodd, investment analysis. Well done, David.
Yeah, no, look, I learned a lot doing equity research, interviewing CEOs and leaders and creating, really cash flow models and balance sheets for those companies and modeling them. It really learned a lot, and it's sort of, it's a good experience to have. But I agree with you both. I think, look, there's a market for a few of these. Look, if there's somebody, I remember hearing one of the guys who were doing a Sol product, that they're running validators, that they have really deep knowledge about Solana. Like, that could be a situation where, you have really smart people in the space and they're doing a Solana offering. But short of that, I think just people, companies pivoting just because they think it's hot will probably end up badly at some point.
David, can you and I have a Sol versus ETH conversation at one of our upcoming live streams?
Yes, we absolutely can.
Josh, go ahead. I cut you off again. I'm sorry.
No, you're not cutting me off. No, it's more like just, brainstorming. It's not like I guess I am wondering.
Emma, come on. That's mean. Go ahead, Josh. Sorry.
I'm wondering if you guys can explain for the audience, although I do have my own thoughts about this, but just I think it would be helpful for some in the audience to hear, like, right now as we're thinking of stablecoins, to bring things like full circle in a way. And the interest right now on stablecoins that cannot be shared with the holders of a stablecoin, right? In terms of, this came to mind just because we were talking about obviously returns and how much, but if the rates change, if the interest rates change, how does this affect how profitable it is to be having a reserve of stablecoins?
Josh literally has been reading our mind, David. David, you and I chatted about this yesterday. Because you start looking at, once interest rates start coming down, you start looking at margin compression. And at some point, XYZ company issuing stable tokens is not as profitable. I don't expect zero interest rates, David, but how much can you compress margins?
Yeah, and look, there's also the cost of doing business, so that's not going to change.
Yeah.
Or it may get a little lower, it may get a little higher, but yeah, you could see severe margin compression if we were to get a number of cuts. So no, that's definitely something to think about, Josh. It's something Ron and I talk about, and it's something interesting that we'll see how it's factored in. Like, do those companies that go public that have stable coins, if there's a 25 basis cut, do those stocks go down because of that?
Yeah.
We'll get to see a real correlation there.
And David, it's not just about fleeing to other assets that are higher returning treasury assets outside of the United States. It is also about essentially the risk-free premium they get owning, short and long dated U.S. treasuries. It's not going to potentially overseas where there might be higher returns, but not necessarily as risk-free as U.S. treasuries would be. I'm just going back to the Emma Channing comment. I am not a bet chicken, Emma. I'm at an age where I know what bets to take, and right now there are no bets I'm taking against David. I might wager something against Emma, but we'll have to figure out what the bet is, Emma. David, Josh, we're just about out of time. There's a heat wave coming this way, and I mean the weather, not all of the stuff that's going on in the crypto market. David, will you be flying to Miami on the jet? And let me ask you this: when all the sports are over, do you watch like fishing, or like what is the sport that you're watching?
Oh, basically once basketball's over on Sunday, I'll watch a little of the Wimbledon, and then actually I'm going to go on vacation, so that will fill up my time when there's nothing else to watch.
And Josh, what do you have coming up this weekend? And for the record, everyone watching, Josh and I will still text David while he's on vacation.
Absolutely. I don't have anything really. Well, I have a few things, but it's just stuff with my family. Going to the beach and doing some stuff there. I am very excited for next week because that is when my children, I believe, begin camp. Day camp, because they've been out for a couple of weeks. Well, I feel like it might be a mirage in the desert that I see coming. So I have to double check the dates. But yes, I believe it's next week that they begin day camp.
David, Josh, I will be loitering around New York a little bit. Next week is permissionless, and I know there's a bunch of events and interesting things going on, and we do have some of our WSBA members we're meeting at for our monthly WSBA networking and cocktails. Shout out to Phil Berg, who's hosting us at the Players in Gramercy. I'm expecting at least one of you to be there. Emma, she can fly in on the Gulfstream as well and join us if she can. Everyone, thank you so much for joining us. If we missed any of your questions, email us info@wsba.co. We will be back next week. Everyone, have a great weekend.